Okay, hello guys, thank you and welcome. Sorry, my camera got broken, so today it will be maybe a little bit different that you know it. But never mind, I just wanted to be with you like live. I don't want to be like a kind of podcast that you just see a screen and you won't see me. I want to be with you on the charts. Today's topic, I want to show you liquidity, where to find it, uh, how to profit from it, just some basics, maybe also something advanced. But I want to do a quick, good video, nothing too long, just a really sharp and professional video. So I don't really have anything prepared because we have liquidity everywhere. Uh, I won't tell you like these high information that this is this and this is that. I will tell you where you can find it. Also, what I will tell you the information if you are, for example, a beginner. A lot of for example, on the social media and also on YouTube, when you will find it. A lot of people is talking about it that the liquidity is like the fuel of the market. It is true. Basically, it's taking the money from the dumb people to the intelligent, smart, rich people. So uh, basically, what we were taught when we started, all of us, I believe, uh, we started with support and the resistance. I think all of you started like this. That the price bounced from this like price level for 3 times at least. So this is a valid support level, and you can go from this position there, and it's quite a big risk reward ratio from here to here, and this is like the resistance, and this is it. It can work. It works. I think that some traders are profitable on this model, but I personally trade with the SMC supply demand, and the smart money take this as a liquidity model. So I will here we have dollars, so this is liquidity. It basically means that there are these dumb traders. The market have to take these stop losses because you enter here and you have stop loss here, so the market will go like this, will get you out of the position and will move your way. I think you all know it, that you have a good setup, but there is only the problem with the liquidity, only with the stop loss, and it goes right to your take profit. So this is the basic liquidity problem, and it's also in the sell model. It's only in the other way. We have some kind of patterns. Basically, mostly it's these trend lines or this kind of channel trend lines when you are in the trend. Also equal highs and equal lows. Sorry. So these are like most popular, and I will show you also some live examples. Yes, okay. So this is like the first one, that you have some big trend. You have a big push. Now it pushes back. It does something like this. You have a supply zone right here. You want to target this zone. This is your demand zone. So also in the best scenario, you have here an imbalance. I will show it to you also what to look for, because it's a higher probability setup. So this is like an imbalance, and here you have this. So this is liquidity. This is internal. You don't want to trade it, or as for me, if you want to trade it, I won't tell you like anything. It's up to you. But okay, sorry. But if you really want to, where is my beautiful picture? Here it is. You have to see it. Okay. So like if you want to trade it, but if you want to like trade the SMC and know where the real money is, so I will just tell you where it is. So we have an imbalance. Okay, so our scenario, it is to put a sell limit, or we can manually trade here, because we are like pretend that this is a downtrend that we want to sell, and we go to this demand zone. We have 6 risk to reward ratio. If you want to be more aggressive, you can go from the 50%. I also do it. What I sometimes use, or what I'm like developing or try to get to know, is to enter from these stop losses. Basically, most of these stop losses will be here or something about here, so I try to enter from here. It will be more more safe, but you don't know, you could miss the trade. So just 50% is it's safe, it's okay. Just maybe give some breathing room, some 1 pip of stop loss, and you have then risk to reward ratio. You target your sell side, buy side liquidity. So you target it because you are in a downtrend, so you target it, and it should go because the market, when you go down, so it goes like this, like this, like this. Now you are at this zone. Oh, imbalance, sorry. Supply zone. There will be your demand zone. Demand zone. But there probably somewhere here it will go like this to like here also, but it will go through. So you can go also to this if it's a clear downtrend. If it's not choppy as hell, so go for it. This is the principle. The same is also on the sell side. Maybe what I will show you, that there could be also a trend line. How should I? Yes, because we are in the downtrend like this, so the price has to like retrace. It goes to the supply zone, so it will make a little trend. So this is also a liquidity, because like why? Maybe I will just go here and put it from here to here. Okay, why this is our liquidity? Because the beginner traders, they will put their they have watched 3 best strategy videos for beginners tutorial in 2023, how to make 1 million in 1 month from trading. So they will put their buy limits, or they will execute right here, and they will go here. Also the market will go sometimes through here, so this is also the liquidity grab. So they probably could get stopped out. We don't know, but we do not care, because we are professionals. We do not care about this liquidity. We only trade supply zones. If you use footprints, if you use book map or anything else to enter, or Wyckoff or anything, I don't care. but if you trade from the supply zone, I think that you are on the better way than this retail trader. Also, yes, we are retail traders, but in the terminology we are a bit smarter. So this is our this is the channels and flag, or how is it called? So this is where the retail, these beginner traders with the Lambo, where they are buying. Okay, but we go from here, and also the market takes them out and push it. Okay, so now you know the theory. I will just delete this, reset the chart. So where is the where is the liquidity? I prefer the GAN box. We have an imbalance right here. We have a big zone right here. Okay, is there liquidity? Can you see? Like we can see some equal lows right here. It's a relative equal lows. I don't really like it. I wouldn't consider this as a liquidity. You want really like normal. Sorry. This is something. Okay. We just want. Okay. For example, here there is a clear zone. We have an imbalance, small imbalance right here, but also another imbalance. As you can see the gaps. I will just mark it. Okay, and here you can see that the market just consolidated, push it up, went down, second try, and really went down. So if you are smart, okay, maybe we would be stopped out. If we go like from this way here to this demand zone, we would be stopped out, but it's trading. The market is always right. We can't like predict it. We can only react. So this is it. If you want to enter from these stop losses, you would be also stopped out. Never mind. Even this is some just basic scenario just to show it to you. I know we are in the uptrend. I know I'm shorting. I wanted to show it to you. Also another zone we have right here. Sell candle before the big impulse. We have an imbalance right here. You can see that the market just went here down. Also, where are most stop losses from the dumped traders? Here it goes down. Also, it can go to this zone. Okay, you have to like manage it, but this happens. Okay. I want to search some really nice, some equal lows. You can see it here that these are equal lows. Okay, so this is not equal lows. Okay, but this is a nice, this is a beautiful zone. Okay, price went here. Here you can see this small wick took liquidity, and you can see the sharp impulse from just look at it, from this candle to here. It was like one, you can see, one day, and here from here the same distance. It was only how much? 4 hours, 6 hours, 7 hours. Sharp move. So liquidity grabbed in the, I think, New York session 14 in our time. It could be, yes, it could be New York session. So liquidity grabbed, went down, smash, take profit if you want to make money from it. Okay, a little strategy from me. take it from the 50%, drag it to your modified entry. There will be most stop losses, you will avoid it and place it somewhere here. Okay, it's 5 to risk to reward ratio. If you want to be a real badass trader, just take it from the 50%. Okay, so there we don't have it, but if you have luck, so you can just go from here and you have 11%. So this is the liquidity. If we go from this to here, I think this could be a small on the 15-minute. You can see this is the pattern. This is the pattern what I told you. This is the liquidity. What will the market grab? So they are buying from here, from here, from here, from here, here, but oh no, the market unlikely is going not here, more up, but fakes it, goes down. Take the stop losses because the stop losses are right here. When you are dump, you put your stop loss here and you aim for the poor to risk reward ratio, and you are stopped out like quite a lot. You can see it. So, and now you are panic selling because you are greedy beginner trader. So you put your stop loss, or you put your another order right here and you put it here. Maybe you hope to this beautiful risk reward ratio and you get what? You get stopped out. So you know that we don't trade like this. You don't want this risk to reward ratio because it's poor, this is not good, and you can see that this is internal liquidity and we don't trade in this internal liquidity. We are better traders, we want to be professionals, so we in the best scenario also we refine it. So we go to this zone. Also we have an imbalance really here, so we wait. This is a nice setup. What we can also see, we have a small zone right here. This is an inducement. Why this is an inducement? Inducement is a fake zone, fake supply zone or demand zone. You can see the reaction. So this is inducement, we have imbalance, we have a zone above, and we have a liquidity, so it should really go down. When I told you the strategy, what I want to develop now, what I'm working on, so you put it like this, you in the 50%, because I like the 50% tighter stop losses, and you drag it to the enter, because there are the most stop losses. You avoid being stopped out in sometimes, and where you can aim here, because you grab the liquidity right here, and if you can see it, you have several zones, so just set multiple TPs. So right here it will be your first TP. There we have imbalance, also nice zone, nice impulse, so there you will have another. And if you have luck, I don't know now if we are in uptrend, downtrend. If we are in the downtrend, it would go, or I would consider that it would take this liquidity, and you have also this zone, because there you have imbalance and it's unmitigated. So we can go also here, or here, but you could see that that we won't go. So where we are aiming right here, for example, we have 8 risk to reward ratio, we are in the trade and we smash it. Where is it going? Okay, just right here. Why right here? Okay, sorry, I didn't see it. Yes, like if you just mark every single zone you can, and you will see it. But if you will have 10 zones where to target, it could be a little bit confusing. So mark like 3, max 4 zones, lines where to take profit, and that's all. So also, okay, in the middle you can see beautiful 10, 11, almost 11 risk to reward ratio. So this is it for liquidity. I will make another video. I just wanted to this video that it's quick, that it's simple, fast, interesting and important information to you, that it's really simple, and just go at the market, go at the charts, and just go see it. So thank you for this video, and let's see each other at next trade, next setup. So thank you, and bye bye.